Hello, friends. This is Renzo again with another video on the stock market. Again, I am just sharing my knowledge with you guys. So hopefully you learn something from this if you want to start trading or investing in the stock market. So today, what we're going to talk about is some of the terms that we use when we are doing analysis or when we actually entering or exiting our trades. So the first term and definition that we're going to talk about today is it sounds funny, but it's not funny. It is FOMO, FOMO. And FOMO means fear of missing out. So, what is fear of missing out? I'm going to give you an example of what fear of missing out means. Okay, if you look here on my screen, okay, you can see that here, right over here. All right. So we see this red candle, this bar right here is called a candlestick, and it's red, and it's going down. And we decide we're gonna short the market, so we're gonna sell high, buy low, so that we can collect the difference, and that will be our gain. But we don't do the analysis. We just see, oh my God, the market is going down. It's red. It's red. It's red. And before you know it, you say, you know what? I don't want to miss out. So you get in. But what happens as soon as you get in? The market reverses against you and you lose your money. Okay? So fear of missing out is jumping in the trade blindly just because you see it going one way and you're afraid of missing on that on the run of the stock. Let me give you another example, if I can find it. So like right over here. So you see right over here, the market was going down and down, and for some reason you didn't catch this move down. But then it's right over here, and you don't know how to read any of this. You don't have anything here on your screen, and you just said, "Oh my God, it's been going down. I don't want to miss this opportunity." And you get in. But what happens as soon as you get in? Because everything was red, the market goes the other way, and then you lose your trades right over here on this day because you were afraid that you were going to miss the run of your life, and you thought that this was going to continue to go down without actually understanding price movement or how to read a chart. Okay, so I could have told you here, well, hindsight's 2020, that that was not a good place to go short or go down because there was already a floor forming right over here from previous data. Don't worry, you're gonna learn that during the technical analysis video. Anyways, so that's the first term is FOMO, FOMO, and it stands for fear of missing out. The second term we're gonna talk about today is the trend. You're gonna hear this a lot when you trading stocks. If you're listening to other chat rooms, if you listen to the news, you're gonna hear the trend, the trend, the trend. The trend is your friend. What does that mean? What does that mean? You should always invest or trade in the direction of the overall trend. Okay, so that means, is the market going up or is the market going down? Now you have short-term trends and long-term trends. Okay, so let's take a look at this again, at this chart. We have here the 1H means 1 hour. So this is the 1 hour chart for the SPY or the S&P 500 that we talked in the previous video. Talk about in the previous video. Okay, so that means that each one of these bars represents the price for 1 hour of the day. Okay, so let's take a look at this 2 days right over here. Okay, so we can see that for this day, the short term trend for 1 hour was going up. Can you see that line right here was going up? We can see that on this other day, the overall trend for short trend, because it's just 1 hour over the one day, was going down. Now, there are chances where the trend can be up and down in the same day. Let's see if we can find one that shows that. Okay, so for example, right here, we can see on this day that for half of the day the trend was going down, right? and then it reversed and it went up. So why is it important to understand the trend and whether it's a short or a long term? Because that's what's gonna determine if you want to go for a long term trade or just for a short term trade. So for a day or two, or for two days to 2 months to 2 years. Okay, so now let's look at the big trend or the overall trend. Now we're going to switch this to the D, which means day. Okay, so each one of these bars is 1 day, one whole day of price action. So we can see that the overall trend for the S&P 500, in this case the SPY, is up, is going up, right? Even though there were some instances where it tried to turn negative, but it was just a short retracement down and it came back up. Okay, here we see that the trend started to reverse negative and then it turned and continued to go up. Okay, so this is the long term. So again, this is going to determine whether or not you want to go for, you want to invest long term or short term. Okay, so let me give you an example. Right here we see that for this whole time the price went up and then bounced around this point and it came back up and now it's bouncing again at this point. So if it holds this level, right, it should continue the trend going up. But if it breaks below this level, then it might start reversing and going down. That means that the trend has reversed. If we want a day trade, okay, we're going to go to the 5 minutes here, 5 minutes right here. We can see the overall trend was down and here it reversed. So understanding the trend is going to help you understand whether or not you want to go long or for a long time, or if you want to do a short trade in the market. Okay, all right, so please take notes. If this is starting to get confusing, take notes. If you have my email, send me an email. If not, leave me a comment here. I'll try to explain it again the best I can. But this is not hard. This is really not hard. It's just, is the price going up or is the price going down? Now that brings me to our third definition. Okay, you need to understand these terms: bulls and bears. A bull, like an actual animal, the bull. Okay, when you hear the term bull or bullish, that means that the market is going up. That means that the trend is going up. The trend is bullish. At the same time, if you hear the term bears, the bears means that the trend is going down or is bearish. Okay, don't ask me why it's called the bulls and the bears. It's just what they call. So remember, when it's bullish, the trend is going up. When it's bearish, the trend is going down. Now you can apply the same concept to a day trade or to a long-term trade. Is it bullish? Yes, then you're gonna buy and hold it for a while, for a day, 2 days, 3 days, maybe just 10 minutes. If it's bearish, you're gonna sell and hold it for maybe 10 minutes, maybe 10 days, maybe 10 months, 10 years. It depends on the overall direction of the market. Okay, all right, so now let's talk about what is a day trader or an intraday trader. Okay, so now we're gonna get in a little bit more into the meats and potatoes. What is a day trader? Trader is somebody who trades during the day. So he opens a position in the day and closes the position the same day. Let me get rid of this drawings right here. So for example, all right, let's go to today's chart. That was today. So I am a day trader, and the reason why I'm day trading, even though swing trading or long-term trading has other benefits, I know that for my goals, it's easier just to collect small to medium gains, but add up those gains, and then you get a good pot of money in your pocket. So, and for our strategy, my strategy, my wife's strategy, we collect small gains, but those gains add up, and we are good to go. We get more than enough. Okay. So today I'm a day trader. So let's say I enter a position right over here. Okay. Put that right over there. Let me make it so we can see it. All right, so we enter the position right over here, the circle, and then I hold it for a couple minutes, and then I exit my position right over here. Okay, so I collect this many points in dollars, and I get out. So that's my trade for the day. I am a day trader. I am an intraday trader. Okay, so I'll open a trade today and I close it today. It doesn't have to be this big, this long. I actually traded this today. I enter right over here, okay, and I exited right over there. So I only collected. I was in the trade for, let's see, 12:55 to 1:20. So like 20 minutes, 15 minutes, 20 minutes. Okay, I was in this trade. I got in, I got out, and as soon as I got out, I saw that it started reversing again. But I only took it for a couple minutes and I collected a decent amount of gains. Okay, so remember this: day trader or intraday trader, you open and close your positions the same day. Now, what is a swing trader? A swing trader is somebody who opens and holds a position for 2 days and longer. Okay, so let me give you an example of a swing trade. Same concept. Right over here, let's look at this side of the screen. Okay, so we see that the price came down, it reversed, and now we decide to enter a trade right over here. Okay, so we enter a trade over here, but we see that the price is going up and it's going up, and we say, you know what, we're gonna hold it, and we hold it until we get right over here. So we get all this resistance, this top ceiling, and the price can be broken, and we don't know, and we say, you know what, enough is enough, I already collected money, and I get out right here. So you hold this position for 1 day, 2 days, 3 days. So that makes you a swing trader. So you're swinging it for a couple of days. Okay, it doesn't have to be that many days. It could be 2 days, it could be at the end of the day until the next day. So you could open a position right here at the end of the day and close it right here at the beginning of the day. So that right there is a swing trade. Anything that is overnight, that you don't open and close the same day, is a swing trade. Why is it important to understand day trading and swing trading? Okay, number one, your risk to reward ratio. How much are you willing to make? Like you see here in this example, if you enter here and you held it for 3 days, you make a lot of gains. In my case, I would enter and probably get out. So my gains, sorry about that. So my gains would have been minimal compared to somebody who held this, but I want to make sure to protect whatever money that I'm making every single day, because every day there will be another opportunity to be in the market. Okay, but at the same time, any investments that are less than 1 year, that you hold for less than 1 year, are subject to higher taxes. So every time you open and close a day trade or a swing trade that is less than a year, you're subject to higher taxes. Okay, so understand that before you start trading and you're thinking you're making thousands of money, and next thing you know, you get a 1099, you had to file taxes, and a third of that is gone. So just learn that, understand that, okay? All right, so we talk about swing trade is anything more than 1 day. Now, let's talk about the PDT rule. The PDT, Papa Delta Tango. It stands for Pattern Day Trader. So what is a pattern day trader rule? The rule says that if you have less than $25,000 in your brokerage account, you can only trade 3 times in a 5-day trading period. Let me explain that again. if you have less than $25,000 in your trading account, you can only trade, you're subject to only 3 trades in 5 trading days. Okay, so if you open a trade today and you close it, that is one time. If you open 3 trades today and you close all 3 today, then you run out of trades. Now, if you open a trade today and you close it tomorrow, that doesn't count towards the PDT. Okay, so it's any day trades, not swing trades, any 3 day trades in a 5-day trading period. Okay, now if you have over $25,000 in your trading account, then you're not subject to the PDT rules. However, in Ameritrade, TD Ameritrade, and Thinkorswim, if you have less than $25,000 and you trade more than 3 times, Thinkorswim or Ameritrade will block you until you deposit more than $25,000. So if you have $25,000 the next day and you put them in your account, then you can start trading again. There's other companies like Robinhood where if you violate the PDT rule, they can block you for up to 90 days and you cannot use your account for 90 days. But after the 90 days, you can go back to having a small account, less than $25,000. All right. All right. So next, we're going to talk about Thinkorswim or TOS. TOS or Thinkorswim is the chart that you see in front of you. It's the chart that allows you to analyze the market, do chart analysis, understand the price action, and determine whether or not we can go on a long trade, on a short trade, on an intraday trade, or a swing trade. Okay. What's good about Thinkorswim? It has all these gadgets right here on the right side. That's why I like it. You can click here and it gives you the news, live news of what's going on for this specific symbol. In this case, the SPY, which is follows the S&P 500. Level 2, we're going to talk about level 2 some other time. We have a dashboard what allows you to buy and sell right on the spot. You just put the quantity and once it hits your price, you buy or sell. Okay, let's see, we have big buttons on the side. You can do the same thing. So it's very interactive. Oh, what happened right here? Let's go to chart and let's get rid of that. We have the interactive trader. So we have a lot of stuff. Honestly, I don't use a lot of these things because I trade from my phone. So I use this for analysis, but it's easier for me just to be on my phone. You can download this application on your phone and I just hit my entries and my exits on my phone. Okay, now let's talk about technical analysis. You're going to hear this a lot. This is like the bread and butter of trading. Technical analysis. Technical analysis includes how to read the chart, identifying points for potential entries, potential exits. Is a trend going up? Is a trend going down? Do you have to? How long you gonna wait if the market is going sideways? So we talk about trend going down, right? If you see it right here, trend going down. In this case, right here, the market is going sideways. Then price goes up, so trend goes up. So all that analysis that you will learn in a later video that I'm making is called technical analysis. You're going to learn what these lines are right here, what these things are right here, how to read them, and whatnot. So technical analysis is also called chart analysis. It's how to read the chart to determine whether or not you're going to go for a long position or a short position. Long position meaning going up, short position going down. And yes, you can make money, a lot of money, when the market, the trend is going down. Okay, you'll learn that in a later video. And the last thing we're going to talk about today is indicators, studies, and strategies. Okay, so what are indicators? Indicators are all these tools here on this chart, on this top chart, that allows us to read the chart a little better. So I have a few indicators here, like you see right over here, that tells you, well, the price is reversing to go down. I have an arrow. I have these lines that represent the high and the lows of the price days. Okay. And we also have studies. The studies are these things right here at the bottom that allows us to see the movement of the price. Is the price is the overall sentiment of the market going up, or is it bullish, or is it going down? Is it bearish? Is it at the bottom where people might potentially start picking up shares to buy, or is it at the top where people might start selling and collecting their profits? Okay, so here I have three. I have an RSI. You're going to learn that in the technical analysis. You have the MACD or MACD, and I have another one that is a customized one. It's a wave trend reversal. But the studies align with your indicators, help you visualize and understand and make a good technical analysis on your charts so that you can have a better understanding of whether or not to get in on a trade, or the points when to get in on a trade. Now, the strategies. Strategy is just what it is a plan on when to get in and when to get out, how long to wait to get in a trade, and when to get out once you get in a trade. Here in Thinkorswim, we have this button right here. We have all these bars, all these buttons right here on this top bar. But if we hit this one right here that says Eddy Studies, that is the fastest way to find them. Okay, so if you see here, there's three tabs: Studies, Strategies, Sets. There's no sets. Studies, you can type anything here. So let's see, I mentioned the RSI, and it gives you the RSI. There's an RSI crossover. There is the RSI candles. So it gives you different studies that you might want to put on your chart. Okay, so let's try the RSI candles. I never used those before. Okay, you double click it and you see it right here. RSI candles. We're gonna hit apply. I'm gonna hit OK, and let's see what it does. Okay, check this out. I've never used this before, but it's pretty cool. So now we change this candles to yellow, meaning that it's sideways. It doesn't know which way the trend is going. Now red means going down, green means going up. Okay, I honestly don't use them. I don't want to use them because it's confusing me, but you can find things, all the studies that you want to add to your chart. If you want to put the same ones I'm using, wait for that video on the chart setup so you understand them. At the same time, we have strategies. So you hit on strategies, it's actually going to put buy and sell signals on your chart, but you have to be willing to have patience and sit and wait until it tells you when to get in and when to get out. Okay, so let's see. And believe me, this is not 100% accurate. So you still have to do your due diligence to make sure that when a signal is triggered, it's a good point for a position to be entered or exited. Okay, so let's see. Let's add that. But we're gonna add that. I don't know what it is. Okay, we just added it, and I think it gives me these arrows right here, and it's telling us that we can see the let's see. I don't think it did anything, honestly. Or did it? I think it did show these arrows right here where it says, you know, once the arrow is populated, then you can go on a long position or a short position. Okay, so I'm just going to take it out, and I want to go back to my original chart. Okay, so this is today's video was about some of the terminology and definitions that we use and that you have to be able to understand once you start trading, actually training first before you start trading. Okay, so we talked about FOMO, fear of missing out, bullish and bearish, the bulls and the bears, what a day trader is versus a swing trader. We talked about the PDT rule. We talked about the trend, short-term trend and long-term trend. We talked about what TOS or Think or Swim, technical analysis, and indicators, studies, and strategies. All right, guys. Again, my wife and I, we just want to share what we know, and what's allowed us to make a little bit of money in those last few years. And if you know something that you want to share with us, please let us know. Leave a comment, and we'll get back with you. As always, please make sure that you train on a paper trading account before you get into the stock market, because it can be risky. When in doubt, stay out. Take care and see you later. Bye.